This is the Asia Trade. I'm Shery in Tokyo.
I'm Haidi Stroud-Watts in Sydney, where the market has just opened. The top stories this hour: a risk-off start to the trading week as President Trump says he's set to announce 25% tariffs on all steel and aluminium imports. The dollar is strengthening and Asian stocks set for losses. Some relief, though, for Japanese investors as Prime Minister Ishiba returns to Tokyo, avoiding any new Trump trade demands. And Chinese consumer inflation gets a holiday bump, accelerating for the first time since August, but deflationary pressures remain.
Right to our top story, President Trump saying that he's going to slam 25% tariffs on steel and aluminum. That announcement coming while speaking to reporters aboard Air Force One.
Any steel coming into the United States is going to have a 25% tariff.
What about aluminum, sir?
Aluminum, too.
10%?
25%.
25 for aluminum as well?
25 for both.
The currency market is reacting swiftly to those comments. Take a look at some of those commodities-linked currencies like the Aussie dollar, Kiwi, and CAD. The Canadian dollar falling by the most in about a week or so after 5 days of gains already. The Aussie also losing about 0.4% against the U.S. dollar, falling for a third consecutive session. Already the offshore yuan was coming off the worst week since November. Of course, we know that those reciprocal tariffs from China have gone into effect today, retaliating on those additional 10% tariffs coming from the Trump administration, Heidi. But really, we don't have that much clarity on how these steel and aluminum tariffs will be imposed. Of course, President Trump has made those comments about the level of those tariffs, but not necessarily when they would be imposed or take effect.
And I guess also the longevity of how long these threats and how long, the actual execution of these tariffs will stay in place too, given that we know that the tariffs that, were waged upon Canada and Mexico was walked back right after some sort of semblance of compromise or agreement was received after he spoke with those countries' leaders. We're still watching China very closely as well with those 10% tariffs and what could be worked out once we have President Trump and Xi Jinping speaking as well. We are also kind of seeing across the board dollar strength, not just against those commodities currencies, but also broadly in that G10, just that advance for the US dollar continuing. For more, let's bring our Bloomberg Metals and Mining reporter, Joe Doe. So, Joe, in terms of the broader picture when it comes to the impact on broader commodities, it's been an interesting kind of dynamic, right? Because at the same time, we are sort of seeing a little bit more of optimism when it comes to China.
Yeah, that's right. I think when the tariff talk has started up, it's a lot of difficulty for traders, for buyers in the U.S., and more broadly across the markets across the globe, right? Because the U.S. market kind of sets the tone. And I think there's a concern, right? We had Trump say he was going to put tariffs on, imports from Canada and Mexico last week, and then he pulled back from that. Now he's coming out and saying aluminum and steel tariffs on all incoming imports across the globe. So I think I've already had conversations with a few folks in the market who are obviously a little bit confused. I think that's the difficulty here, is it just inserts so much uncertainty and confusion, because this does mean immediately people are going to have to start rethinking potential supply chains in terms of where they're getting their metal. And there's a lot of phone calls happening tonight in the United States when most people thought they'd just be watching the Super Bowl.
Yeah, I mean, we really don't like news coming from the U.S. at this point, right? But, Joe, do we have any lessons to take from the first Trump administration? Because we know that he imposed those tariffs on steel and aluminum, but then he granted some exemptions to partners.
Yeah. I mean, listen, it's not clear exactly how Trump will do things this time around, but a lot of the discussion from various sources I've been talking to, especially over the past 3 months since he won the election, is you can expect him to probably do some sort of tariffs and then work his way back from there, right? But it's not clear that he would necessarily give exemptions. Again, it's not even clear when these specific tariffs would go into effect. He has not said what he would do. He said he's going to announce this tomorrow. But I think the way the market is kind of preparing itself here is that he will at some point probably implement some sort of tariffs, and then at that point he might go to this kind of bilateral negotiation tactic. And as many people know, they refer to President Trump as transactional, right? And I think that's some of the expectation here. But to be clear, it is not clear it is not clear as to what he's actually going to do.
Do we know at this point which countries, which companies are going to be hardest hit by this, and sort of any kind of, I guess, modelling around the real financial impact?
I mean, the two big ones in terms of imports of steel and aluminum that are hugely important in the United States is Mexico and Canada. Canada accounts for more than 50% of the aluminum shipped into the United States. Mexico is a massive exporter to the U.S. of steel. Brazil is another important one. The United Arab Emirates, in terms of aluminum, is a huge exporter to the U.S. of aluminum. I mean, these are the nations that you're looking at in terms of who might have the biggest impact in terms of what they're shipping into the United States.
Bloomberg's Jodo there with the latest, and the FT is also reporting that China's retaliatory actions against US tariffs are now in force, with the deadline passing at midnight Beijing time. For the latest, let's bring our Chief North Asia correspondent Stephen Engel in Hong Kong. So, Steve, what do we know at this point?
Well, we haven't heard much, and that essentially means those retaliatory steps by Beijing are likely to have taken effect, according to the Financial Times, at 12:01 this morning, just after midnight on Monday. That was the deadline, February 10th, that Beijing gave when mid-last week they announced, within seconds of the Trump administration announcing the blanket 10% tariffs, that they would have these retaliatory steps that the market sort of viewed as muted. But again, even Donald Trump said that 10% initial tariff against China was probably an opening salvo. So the retaliatory steps by Beijing could also be a retaliatory or essentially opening salvo of retaliation. There are more levers to be used, but right now there's all quiet on the two fronts from Beijing and Washington as that deadline, supposed deadline. These trade actions usually do take effect at 1 minute past the hour on the day they've been designated to take effect. So we have to assume the duties on $14 billion of U.S. goods, roughly 80 products from America into China, including tractors and other industrial vehicles, as well as LNG and coal. Those 10 and 15% tariffs would take effect, or have taken effect. And also, you know, they announced, we have a list of the various actions we got from China last week. Export controls on tungsten-based minerals and metals to U.S. companies, including the parent company of Calvin Klein and Tommy Hilfiger, as well as a biotech company, Illumina. They were added to China's blacklist entity list. China also launched an antitrust probe of Google. We heard that there could potentially as well be in the works an antitrust investigation into Apple's App Store in China, and they also have pledged to take the case to the WTO.
And Steve, of course, a growing concern for China has been that these tariffs could add additional pressure on prices. But it seems that at least when it comes to January consumer inflation, it's picked up a little bit.
Well, it was the long Lunar New Year holiday in January. It came early this year, sometimes January, sometimes February. So the numbers year over year were quite good. It basically stopped a string of month-over-month consumer price declines. The longest streak actually since August. So we finally saw a stop of that CPI deflationary trend. As you can see right there, our disinflation. You can see the trend from August to December, and then the pickup in spending because households essentially traveled and spent more this year. There were some travel vouchers, shopping vouchers that were given out by various municipalities as well. There were a lot of train trips and of course, gift giving. So we usually get the aberration in January or February. This year, 0.5%. It's not a stellar number, but again, it breaks that disinflationary trend that was in China. The big question now going forward, can this be sustained beyond the aberration of the Lunar New Year holiday? If we change the page and look at the PPI, which is factory gate inflation, but it's been deflation for 28 consecutive months, and that deflationary trend held steady in January at minus 2.3%. So factory gate pricing power still not there in China. And this is one of the biggest issues the authorities are going to have to at least address, if not tackle, when they meet for the National People's Congress in the first week of March.
Our Chief North Asia correspondent Stephen Engel there with the implications of Chinese tariffs and, of course, for the economy and for the broader markets. Take a look at how we're setting up because we have seen those oil prices being pressured for a while now. And you can see right now the Asian assets are setting up like this. The ASX 200 under pressure in the early session, 0.7% as the Aussie is also taking a hit given those commodity-related currencies like the Aussie, Kiwi, and also the CAD. Nikkei futures pointing to the upside of 0.2%. Do watch out for Nippon Steel. We are now hearing from both leaders of the two countries that Nippon Steel-U.S. Steel merger might be over. President Trump indicating that Nippon Steel is considering investing in U.S. Steel. Take a look at the offshore yuan right now. Weakness against the dollar after the biggest weekly drop since November. Take a look at how U.S. futures are also trading after stocks fell in the last trading session. We had consumer sentiment taking a hit, a mixed jobs data. Not to mention that this week we'll be watching Chair Powell's semi-annual testimony to Congress, the U.S. CPI numbers as well. Broadly, though, for today's trading session, do watch how defense, energy, AI-related stocks, especially the auto sector, given all of the news around tariffs, especially here in Japan. Of course, those car makers make a big part of the market. Japanese Prime Minister Shigeru Ishiba managing to ease fears that Tokyo could be next in the firing line for Trump's tariffs. During his first meeting with the U.S. president, Ishiba secured confirmation of a close security alliance and a plan to deepen economic ties without attracting any threats to trade between the two countries. Let's bring in Bloomberg News senior editor Brian Fowler. Brian, I wonder how successful this meeting was, especially given that the bar was set pretty low for him.
Well, the bar was set pretty low, but by all accounts, it was a huge success for Ishiba, who managed to combine flattery with an emphasis on all the investment that Japanese companies plan to make in the U.S. to set a positive tone. And then against that backdrop, the two leaders seemed to find a lot of mutual areas of interest. As you said, security around the world. Also, energy was a big topic. It seemed like an agreement that Japan would import LNG from the U.S. and possibly invest in the pipeline project in Alaska for gas and oil. And overall, Trump did, of course, ask Japan to reduce the U.S. trade deficit, which has been a long-standing problem. But the bottom line is there was no direct threat at Japan's auto industry or pharmaceuticals, and that is a big win for Ishiba.
Which doesn't mean it could then come in the future, right? But I guess right now it seems that President Trump is going through his laundry list of things to do. The next one seems to be even the European Union because he keeps talking about them. But Japan, it is an important relationship for the U.S., especially given that the whole point right now from Washington seems to be really pushing back against China.
Exactly. So I think that was the big advantage that Japan had going into this. It's not Mexico. It's not Canada. It has no issue with fentanyl or other drugs. It doesn't share a border. And it does, in fact, stand as a bulwark for U.S. interests in Asia. So that was definitely to Ishiba's advantage. I think, otherwise, Ishiba also just managed to set a good tone, and all the comments coming out of it were very complimentary on both sides, and that was a bit of a surprise because we knew Trump had a true fondness for Abe. We weren't really sure if Ishiba would be able to crack that, and he did manage to do it, it seems.
What's the latest when it comes to this ongoing Nippon Steel, U.S. Steel drama?
Well, Heidi, I think we didn't expect Trump to support an acquisition, and of course he did not. The companies are still, last I checked, pursuing that, but the leaders both came away with the idea that Japan Steel could invest in U.S. Steel, and that would be win-win. Ishiba actually commented on this just yesterday after getting back from Washington, and he pointed out that for Trump it seems to be very important that U.S. Steel remain a majority-held company in U.S. interests, but he also seemed open to the idea of pushing for an investment. So it looks like, at least from the government's standpoint, there's an agreement that an investment would be the best option for those companies.
Bloomberg News senior editor Brian Fowler there. Let's take a look at some of the first kind of companies related to these commodities tariffs to come online. Aussie miners are moving slightly to the downside, sort of pretty modest losses though. That iron ore pure play company of Fortescue off by about 0.8%. We're also seeing similarly modest losses when it comes to Rio Tinto and BHP Group. We are expecting broadly miners across this region to fall when it comes to steel and aluminium shares after that announcement of 25% tariffs from President Trump on all imports of the metals just this morning. Coming up on the Asia trade, Natixis CIB joins us to talk about sticky inflation in the US. We'll also be talking about foreign investor sentiment into Japan with Sumitomo Mitsui Trust Asset Management. Plus, we'll be asking the Centre for a New American Security if Trump's tariffs are more bark than bite. Much more ahead. This is Bloomberg. Here's a quick look at the week ahead. Keeping an eye when it comes to inflation data out of the US. Bloomberg Economics seeing the CPI showing some modest progress towards the Fed's inflation goal. Fed Chair Jay Powell will also face tough questions at his semi-annual testimony on Capitol Hill ahead of the release of producer prices and retail sales numbers. And here in Asia, India reporting fresh inflation data after the central bank cut rates for the first time since 2020, and monetary policy officials in the Philippines may also lower rates on Thursday to support growth. Well, joining us now is Gary Ng, who's a senior economist for APAC thematic research at Natixis. So kicking off a brand new week with the same theme of trade tensions, right? As expected, we did hear that announcement from President Trump, talking about these now tariffs of 25% on steel and aluminium from all countries. Have you had a chance to, I guess, gauge the broader impact when it comes to inflationary pressures, when it comes to broader economic growth for the countries where, this is a significant export?
I think most of the countries that may be affected may be a bit more heading towards the North American or South American side. But of course, from the perspective of Asia, we are possible to see that maybe countries like Australia, which are major commodity exporter, which will definitely have such exposure to the US. So I think for Asia, it really comes to a point that, where the Trump will actually prioritize its own agenda in terms of the U.S. Like growth, jobs, and etc. Versus some of the traditional alliance and economic relationship with other Asian countries, as we also have seen in the case of Japan, etc. But still, I think from a general perspective, it seems that the policies, at least in the short run, seems to be lifting U.S. inflation a bit more than many may have expected. So I think the story that Trump's policy makes the Fed a bit harder to cut rates still hold.
When it comes to Asia, where do you see the broader impact?
It really depends on what kind of products that Trump is targeting. And for now, we have seen pressure on China. And obviously, a U.S.-China trade tension may actually reduce China demand towards the U.S., which also means that it's possible for China to actually dump more goods towards the rest of Asia. So that is actually something that can be deflationary in the manufacturing sector. But on the other hand, on the tariff side, it really about whether other countries can actually continue to export to the U.S. without tariff. As we have seen so far, it seems that the restrictions are getting tighter, even though there's not really direct increase in tariff in other non-China countries yet. But who knows whether it will come.
Gary, I'm having a hard time sort of gauging the net impact when it comes to inflationary pressures, because we talk about potentially tariffs on these metals and you're talking about industrial product costs really rising. But at the same time, you talk about potential deflation coming from China. That economy could get hit. It could really flop the markets with cheap Chinese exports. So net, when it comes to the global economy and central bankers trying to decide policy from here, how does it all factor in?
Well, it is indeed a difficult situation, which is different from before, right? Because what we see right now is that it's possible to see, at least in Asia, growth may not be as great as last year. And at the same time, on the manufacturing side, it's possible to see more deflationary pressure from China. But globally speaking, if we start to see more tensions between US and China, then obviously for the goods that may be shipped or produced between these two countries, we'll see a higher production cost. And even from the company side, if they need to diversify towards other supply chains, etc., it will take investment. So I think it is basically a situation that growth will decelerate, and then inflation may actually stay a bit sticky than many may have expected. But for central banks in Asia, really about whether it's willing to cut rate amid this very strong dollar story. And I think in the last few weeks, we do see a number of central banks would decide that they will still cut because they want to shield growth. So I think pretty much there's still some room to cut rates.
When it comes to the Fed, we are getting the U.S. CPI numbers this week. How do we think Chair Powell will sort of wade through all of these conflicting messages on data? We already had mixed messages from jobs. We already had mixed services data out of the U.S. as well.
I think the interpretation on price will be the most important thing going forward. And of course, it's perfectly right to say that a lot of signal from the job market seems to be very confusing. But I think it's also about what Powell actually said last time, especially in the last Fed minute. And this pivot towards really this strong focus increasingly on the inflation data. So I think we need to see prices going down further to justify at least a more dovish stance of Fed. So I don't expect anything very surprising from Powell's testimony, but basically it is really about a data-dependent story on inflation.
Gary, good to have you with us, senior economist for APAC thematic research at Natixis. We have more ahead on the Asia trade. This is Bloomberg.
Take a look at one of the early movers that we're watching when it comes to the Australian retail space. We are seeing JB Hi-Fi there, seeing a little bit of upside, about 0.2%. We had that first half net income beating estimates. The other story, or the other company that we're watching, is really Star Entertainment, sort of as this drama continues to drag out, right? Star confirming that non-binding proposals for a stake in its Brisbane JV have been received, but none of the proposals have provided sufficient value. So this was really one of the sort of possibilities of being able to sell a stake in the new Brisbane complex to its Hong Kong-based partners, though the opening offers are being rejected as being too low. This is really in the race for survival for the embattled Australian casino operator to try and raise enough capital after we saw last month warning about its very viability as a business and its future being in doubt as it runs short of cash. We did see local reporting earlier that Star was in talks with Chow Tai Fook Enterprises in Hong Kong, also Far East Consortium, to sell a 50% interest in the Brisbane property, which has about $1 billion of debt and still requires a lot more money to get to completion. This is Let's get to New Orleans, where, of course, this is a big event in the US at the moment, the Super Bowl, and we do have hopefully some live pictures of President Trump there attending the Super Bowl, and he's really broken historic Super Bowl tradition there. We have seen all this time no sitting president attending the game until now. So looking out for, yes, President Trump there attending it, along with Taylor Swift, of course, is the other big VIP. Let's take a look at what the President said this morning and how that's playing out across commodities markets in particular, of course, saying those 25% tariffs to be put in place for imports of steel and aluminium on Monday, metal exports from all countries being affected, and also planning to announce these reciprocal tariffs on countries that tax US imports as well. We are seeing a bit of a reaction when it comes to commodities currencies, likes of the Aussie and the Loonie. But this is a picture when it comes to commodity assets themselves. New York crude at the moment holding a bit of an upside there, despite oil broadly posting that third weekly drop as the tariffs really do hit the demand outlook. We did see a slight increase when it comes to WTI on Friday, but still the sort of projections still look very much to demand downside there. Iron ore trading in Singapore actually up by about 0.9%. We did have some positive seasonal inflation data over the Lunar New Year holidays from China, so we could see a bit more optimism when it comes to the Chinese economic recovery story today. And aluminium seeing a bit of upside, the last traded upside though of 0.3%. We're seeing some of those Australian miners, metals and commodities names trading a little bit to the downside in the first half an hour of trade. White House National Economic Council Director Kevin Hassett says President Trump has a multifaceted trade policy that goes beyond just tariffs. He joined Bloomberg to discuss the key factors in Trump's trade strategy.
You know, the bottom line is the first time I ever met the president, right at the beginning of 2017, that one of our first discussions about trade policy was about reciprocity. And so 100% that's going to be a key factor in President Trump's thinking and his team's workouts from his thinking as we work forward. And when you think about, well, what is reciprocity? How should we think about it? Then a lot of people focus on tariffs, tariffs, tariffs. And if we look at just tariffs, then you'll see that our trading partners tend to have tariffs that are 2 or 3 times higher than our tariffs. And so, like, if we were going to be reciprocal, then they could come down or we could go up, but it would be a lot different trade policy. But the way I like to think about it is just think about the fact that we have a tax system in the U.S. that's fundamentally different than the tax systems everywhere else in the world. And so I had my guys a couple days ago just update the numbers I always look at, and we found that U.S. multinationals had paid foreign governments $370 billion in taxes because of value-added taxes and income taxes in 2023. And foreign multinationals operating in the U.S. paid the U.S. government only $57 billion in taxes. And so they have 3 times the GDP we do, you know, globally. We're about a quarter of GDP. And we're paying $370 billion, and they're paying $57 billion. And that's not reciprocal. That's something fundamentally different. And what President Trump wants us to do is to come up with a really smart program that includes trade policy, tariffs, and revisions to the tax code. And he wants us to make it work so that America's on a level playing field again. And the reason he wants to do that is not because of the numbers, it's because of the people. The people in America who don't have jobs because we're paying $370 billion a year in taxes to foreign governments in order to incent our companies to not create jobs here, but create jobs overseas.
Kevin, you didn't mention Europe, but it sounds like you're talking about Europe. What's the ask of the Europeans?
The president is going to negotiate with the Europeans. He's going to negotiate with everybody. And at the time when he does that, you'll find out what his asks are specifically.
National Economic Council Director Kevin Hassett there speaking with our colleague Jonathan Farrow. Let's take a look at trading in New Zealand underway this morning, and this is what we're seeing, of course, sort of broad downside when it comes to G10 currencies trading against the dollar this morning on that announcement of these steel and aluminium tariffs by President Trump, and sort of still trying to work out what the impact of all of that is going to be economically. We're seeing at the moment Kiwi bonds are falling, tracking US Treasuries. That's also coming ahead of a debt sale as well. A syndicated tap of the May 2035 bond. We're seeing the yield on the 2-year rising about 5 basis points, a 10-year climbing about 6 bips there. Well, life just got easier for wealthy investors interested in taking refuge in New Zealand. The New Zealand government is streamlining its golden visa program with the intention of luring more wealthy immigrants to help spark an economic recovery. Paul Allen has more. It seems pretty good timing. I think there's a lot of people worried about the increasing global uncertainty and maybe looking for a bunker or two in New Zealand. What are the changes?
Well, you don't have to speak English anymore, so that's a key change right off the bat. And the amount of time that investors need to stay in the country has been shortened as well. We call this the Golden Visa. Its real name is the Active Investor Plus scheme, and there's just now 2 categories. There used to be more than that. One of them is the growth category. You have to invest 5 million New Zealand dollars, which is just 2.8 million US, thanks to the very favourable exchange rate at the moment. That would need to go directly into a business or something more high risk over 3 years, and you only need to spend 1 week per year in the country. The other category is the balanced. You have to double the minimum investment to 10 million New Zealand dollars, but you have a broader range of assets you can invest in, such as equities, bonds, property development, that kind of thing. But the minimum stay there is 105 days. Now, these changes are intended to boost the number of successful applicants. There were only 43 successful applicants since 2022. So before that, the scheme used to pull in $1 billion New Zealand dollars a year. So the plan is to recapture that money and help boost an economic recovery.
So this should be really popular with wealthy migrants, but how popular are they in New Zealand overall with the broader public?
Yeah, it depends who you talk to, really. Business New Zealand CEO Catherine Rich, who used to be a member of Parliament herself, she's welcoming this, saying, look, it's really going to open doors for investors. And even the architect of the old policy under the Labour government said, look, this addresses a lot of shortcomings here. It's really going to help New Zealand compete. But the current opposition says, look, this is just going to allow the super wealthy to park their money. The English language test doesn't apply. If you're rich, it does apply. If you're just a regular migrant, they say that's unfair as well. But there's also this idea that it will supercharge the housing market or recharge it. Now, again, if you're trying to get into the housing market, housing's very expensive in New Zealand. This is not going to be great news. So it does have the potential to become a political football. And look, if you want to upset a New Zealander, just tell them that some rich person's coming over to buy a beach or a mountain or a farm and stand back and watch the fireworks.
Bloomberg's Paul Allen there. Coming up on the Asia trade, this is what we're looking ahead to tomorrow. We speak with New Zealand's Finance Minister Nicola Willis to discuss the country's economy and her plans to lift growth.
And Heidi, these are some of the top geopolitical stories that we're following right now. Israel has pulled troops out of a belt of land in the Gaza Strip after recovering 3 more hostages. With the initial truce period half complete, mid-level Israeli envoys have set off for a new round of talks in Qatar. Any full Israeli pullout from Gaza will have to be negotiated in the second phase of the deal, along with the Hamas handover of remaining hostages. Meanwhile, Saudi Arabia has once again dismissed a proposal to resettle Palestinians from Gaza in Saudi Arabia. In a statement, the kingdom says the Palestinian people have a right to their land and are not intruders or immigrants who can be expelled. Israeli Prime Minister Benjamin Netanyahu last week suggested a potential Palestinian state on Saudi soil after President Trump said he wanted the U.S. to take over Gaza. President Trump has frozen all U.S. aid to South Africa, citing false claims of rights violations against the Afrikaans population and South Africa genocide case against Israel at the ICJ. South Africa says it's seeking diplomatic solutions to any misunderstandings, and a group that says it represents 2 million Afrikaans speakers has voiced opposition to Trump's decision to withdraw aid while rejecting an offer to settle in America.
Shery, take a look at some of the Australian miners. Of course, this is the earliest reaction we'll see from some of the metals and mining companies and shares to the 25% tariffs announced on iron ore. Aluminium is what we're looking at the moment, and steel companies as well as we get further into the Monday morning open. We are seeing a bit of downside, but honestly, we're even off those modest lows that we saw earlier. Fortescue erasing those steeper declines, down by just about 0.25%. Rio Tinto is basically just treading water now, and BHP Group also off by just about 0.5%. And you're expecting sort of a broadly risk-off sentiment given some of these renewed trade tariffs being announced. But we'll see if there's a bit more upside when it comes to some of the more positive China inflation data that we saw as we get closer to the China Open. More ahead on the Asia trade, this is Bloomberg.
Prime Minister Shigeru Ishiba returned to Tokyo after a warm meeting with U.S. President Trump on Friday, easing investor fears about new tariffs on Japanese goods. Bloomberg senior Asia stock reporter Hideyuki Sano joins us now with the latest. And Hide, we are expecting some gains perhaps at the open with a little bit more relief coming, given that we haven't seen any threats to Japan, at least not for now. So what sector should we be watching, especially given the news of the low-hanging fruits of LNG gas investments and all of that coming out of this meeting?
Hi, Shery. As you said, the market seems to be positively viewing the result of Japan-US summit at this point. And one potential winner from this is likely to be automakers, simply because there was no direct tariffs on them. Investors were really worried that Trump might come up with a new sort of tariffs, but at least so far he hasn't talked about any new specific tariffs against Japan. So that's one sector that a lot of people have been talking about after the meeting between Ishiba and Trump. And apart from that, the LNG project is probably going to be a big thing, but I think that there's consensus that that sort of project takes a lot of time, so there may not be an immediate reaction to the market at this point. And steelmakers, Trump had just announced the new tariffs on steels, so market players are worried about the impact of that as well. But at this point, the price indications suggest that there won't be much impact on steelmakers, Japanese steelmakers at this point. Now, price can change any moment, but given that the direct exports to the U.S. Is very small for Japanese steelmakers, that may be reasonable, but we'll have to see.
Are there any specific sectors that could likely benefit at this point?
Yeah, so car makers are probably the best play at this point. And a lot of that also depends on where the yen is moving. Rough consensus here is that at least the result of Trump's meeting with Ishiba will be neutral to the yen. But other people are saying that there's rising speculation that the yen might strengthen, not just because of the BOJ's rate hikes, but also because of the Trump's tariffs policy. And that is to say, if Trump is going to impose tariffs on other countries like Mexico, Canada, and possibly Europe, and Japan is sort of left without tariffs, then that would benefit the yen. And some people started to talk about the yen becoming a safe haven currency again. So if that happens, the yen might strengthen, which means that the exporter shares will probably underperform relative to domestic players.
Bloomberg Senior Asia stock reporter Hideyuki Sano there with some of the sectors to watch, given, of course, that conversation between Prime Minister Ishiba and President Trump. This at a time as we continue to watch Nippon Steel as well. Of course, we were talking about those aluminum and steel tariffs to come, 25% to be announced on Monday, but also because the Prime Minister is now saying that U.S. Steel will remain an American company. His remarks echoing President Trump's earlier comments that Nippon Steel will not pursue the outright purchase of the U.S. company. Their comments are strengthening the case that a full merger is now unlikely. Let's talk about what this era of Trump presidency coupled with Prime Minister Ishiba's policies could mean for Japanese corporates. Joining us now is David Semaya, Executive Chairman and Representative Director at Sumitomo Mitsui Trust Asset Management. David, thank you so much for coming in today.
Pleasure to be here.
Of course, we have this meeting between President Trump and Prime Minister Ishiba that by experts is being seen as pretty positive, although I do have to wonder how long this could last given that President Trump is so unpredictable at this point. How much more upside could we expect for Japanese markets at a time where there's been already a lot of optimism?
So before I talk about the upside, I just wanted to say a symbolism and timing, I think, is very important. And Prime Minister Ishiba was the second foreign leader right after the Israeli Prime Minister to be invited to the White House. I think that's very, very important and very symbolic. When the two of them entered, I guess when Prime Minister Ishiba came out of the automobile and before they went into the White House, President Trump pointed him to the reporters and said, "I love Japan, I love Japan." A lot of symbolism and a lot of friendship and good relations personally between the former Prime Minister Abe, and he mentioned Prime Minister Abe many, many times. continuity of the relationship, I think, is very, very important. And I think we saw a number of points that were mentioned that indicate this relationship will be first and foremost for the United States, and it continues to be first and foremost for the Japanese.
A lot of optimism, but at the same time, for how long will Japan be a friend when the Japanese yen continues to weaken against the U.S. dollar? We know that President Trump does not like trade deficits, and I wonder how much of a challenge that is also for corporations investing in Japan when your money and your returns amount to nothing if the yen continues to depreciate.
So on that, as a technical, if you're a dollar-based investor, you actually get paid, you receive to hedge into dollars when you're investing in yen. I think the yen is stabilized. We're seeing the Bank of Japan that's raised interest rates, and I think there may be a little bit more room, my personal view, there may be a little bit more room to raise interest rates there. And the yen is weakened to a, I don't know, is it a 20-year low or a 25-year low? I don't remember the numbers. In terms of investment into Japan, I first came to Japan in 1980, got involved in financial markets in 1987. We hit the peak in the Nikkei in 1989, and it's taken 30, 35 years to come back to that peak about a year ago. And in that time, we've seen a whole number of corporate governance changes, a whole number of actions that, whether it be the Tokyo Stock Exchange and its reform, METI and its reform, the corporate governance code coming together, Japanese companies are now returning to shareholders what needs to be returned. They're focusing on their capital as well as their profitability, and embracing foreign investors. And this is important and needed for Japanese companies to not only keep pace, but to move ahead of the overseas competition. There's a lot of pressure that wasn't there during deflation that's there now, and it's very, very constructive, very, very helpful. I'm not the geopolitical guy, but I think the relationship is very strong, and it shows that even though Prime Minister Ishiba is from a different faction of the LDP, that the relationship will go forward. Of course, there'll be bumps in the road. We know that, yeah.
You know, much like, I guess, the effort to make this a virtuous cycle, you talk about more being needed to make this kind of impact and dynamism more of a permanent factor. Do you think there is downside risk that this might be fleeting?
I'm sorry, I didn't get the question. What may be fleeting?
That the sense of sort of newfound dynamic momentum that we're seeing in the economy.
Well, so we've got a number of, I think, interesting sectors to look at. Inbound tourism has been doing very well for a number of years. We have now semiconductors, quantum computing, a whole number of other areas that look interesting. I think we're only in the third inning of unlocking value in terms of American baseball terms, the third inning of unlocking value. Just a couple of years ago, and a lot of people ask me, is Japan back? Well, ask Warren Buffett. He really made a commitment 2 years ago to the market here, and I think this is just the beginning.
You've also talked about how the sort of risk aversion culture is changing. Can you tell us a little bit more about that?
Sure. So whether it be large corporates who in the old days didn't want to do IR trips overseas and meet with their foreign investors, many senior Japanese leaders, presidents, CEOs are now traveling abroad to listen to the advice of their foreign investors. We also have the Japanese government who's focusing on the startup and ecosystem around the country. I was on a panel just a week ago in Miami, the global meeting with global hedge funds and alternative managers. And we had the Sovereign Wealth Fund that was set up in Japan just a few years ago. a venture capital fund set up by a very, very well-known university here just 3 years ago, and a new corporate pension effort to bring the small corporate pension funds together. All of these efforts did not exist just 5, 6, 7 years ago. So a lot of focus by the government and by industry and common individuals. And this all leads into what Prime Minister Kishida started, the Asset Management Nation effort. We saw the NISA savings plan, the tax deferral amount triple, and a huge amount of capital come into that plan. And I think this will continue. We see young people now in Japan who are very interested in investing globally. Quote unquote, Mr. and Mrs. Watanabe, who in the past would allocate their risk assets 80% Japanese, 20% overseas. That's now shifted to 80% overseas, 20% to Japan. So we're seeing a lot of movement and freeing up of capital, and I think that continues.
Semaya, good to have you with us, Executive Chairman and Representative Director at Sumitomo Mitsui Trust Asset Management, joining us here in Tokyo. As we're getting breaking news out of Japan, we are getting the latest trade current account surplus coming in at 1.077 trillion yen for the month of December. This is slightly below expectations, while the trade surplus is also coming in at 62.3 billion yen, which is a really big decline from the previous year. We have more ahead on the Asia trade. This is Bloomberg.
Take a look at some of these commodities currencies. They're seeing that reaction to President Trump's plans to unveil the 25% steel and aluminium tariffs. This Monday, we're seeing the likes of the Aussie, the Canadian loonie, the euro all falling after he signaled these duties when it comes to all imports of steel and aluminium, on top of his plan for other trade tariff measures later on this week. We are seeing Asian stocks, as major markets reopen in the next hour, primed for more losses. This is Bloomberg.
This is the Asia trade. We're counting down to Asia's major market opens and investors bracing for another round of tariffs coming from the Trump administration. Haidi, we heard the president talk about steel and aluminum tariffs of 25%. Of course, we're watching China's retaliatory tariffs on $14 billion of U.S. goods. And all of this as we're also watching here in Japan what's happening to that potential Nippon Steel and U.S. Steel merger that seems to be over now.
Yeah, Shery, these markets are going to have to try really hard to find any upside as we get off this trading week on yet another wave of trade tensions, right? And these are going to be sort of on top of other measures that President Trump has alluded to later on this week as well. But interestingly, though, we do have a little bit of upside when it comes to inflation picking up in China.
Yeah, we've been watching, of course, that China inflation number because tariffs could threaten to really depress prices even more in China, exporting disinflationary pressures around the world. At this point, we are seeing Japanese yen holding at that 151 level. We're seeing a little bit of weakness against the U.S. dollar, but this, of course, after gaining ground against the greenback for the past 4 weeks. JP Morgan saying that we could potentially see that 150 level being breached, but that it doesn't necessarily expect more weakness from there, given the structural reasons behind the weakness of the Japanese yen. The Nikkei taking a hit, 0.2% down. We're watching for those sectors like defense, energy. Of course, we had that amicable conversation between President Trump and Prime Minister Ishiba. Prime Minister Ishiba also confirming that U.S. Steel will remain an American firm. So we will be watching Nippon Steel, given that, of course, those tariffs also would go on aluminum and steel imports. Of course, President Trump had already talked about reciprocal tariffs on everyone. So take a look at how the Kospi is gaining ground because the auto sector has been watched very closely. Of course, more tariffs could be coming and affecting automakers there. Take a look at the Kospi. If we switch the board, you can see what they're doing right now. The Korean won weakening against the U.S. dollar against around 14.55 level. Of course, we have seen a lot of impact in the bond yield space as well because BOK Governor Lee Chang-yong told us last week that really a cut was not necessarily a done deal later this month, so we actually saw bond yields taking a hit. But the Kospi is down 0.5%, Heidi.
Take a look at the impact when it comes to Australia, Shery, and this is sort of perhaps the strongest indication of a reaction to those Trump tariffs on steel and aluminium, of course, given the heavy weighting when it comes to metals and minings in this market. But the ASX broadly seeing downside, but of course we are expecting this to be a broad risk-off sentiment sort of day as well. But in particular, we are seeing some of those miners, the likes of Fortescue, BHP, Rio Tinto, seeing a bit of downside. But I should point out, even though stocks are off those session lows and we're seeing pretty modest declines there. Financials and banks also a little bit softer today. The Aussie dollar, one of the commodity currency cohort that are seeing perhaps the biggest impact, alongside the loonie as well as the euro as well, given the sort of ongoing future threat of tariffs that President Trump has remarked upon when it comes to the EU and broader Europe. 62.61 is where we're trading for the Aussie dollar at the moment, and watching treasuries as well, given that we will see that sort of first reaction to those jobs numbers as well, set for a pretty bright start at this point this week on these tariff threats. Let's bring in Chris Weston, who's a head of research at Pepperstone Group. So, you know, we're kicking off the week with the same sort of thematic: Trump, tariffs, trade tensions. What do you make of it all?
Well, it's all very contained. I think the market's partly got its eyes on the Super Bowl, of course. But, I mean, I think, you know, we're seeing so much headline risk, and we've seen that now for 2 weeks in a row. I think 2 weeks ago, obviously, it was the AI story and the DeepSeek situation. But the market's absorbing this very well today. I mean, we saw a little bit of selling in the Canadian dollar, Mexican peso, and the Aussie on the open and the interbank market. But then it's just come right. It's coming back, and the dollar's being sold off as we go. In a better liquidity environment. Nasdaq futures were down about 0.5% on open. They're now actually up about 0.3%. So, I think in terms of the steel news, the tariff news there, I mean, the market's absorbing that very well. We're hearing the reciprocal tariffs are going to be probably announced Tuesday or Wednesday, but are they actually going to be a significant risk-off picture that some people have suggested? I mean, if we were to see a negotiation and Trump and his team coming out and saying, these are the tariffs we're going to place on you, they're a more fair tariff, they're more in line with what you've given us. Maybe the other side of the story is that the other nations will bring down their tariffs, which could increase global trade. Maybe the market will see that as a positive. We'll have to see. Obviously, the price will dictate that situation. But the market now, again, more noise. But we're just seeing the market digest it very well this morning, and obviously the China tariffs are kicking in as well. So a lot of chop in this market, but in the dollar, in equity futures, there's just a lot of sideways choppy trade. There's no real trend playing through. The market is absorbing this, and they're trying desperately to move on to another thematic.
And what could that be, right? Because while all of this is ongoing, it also makes sort of inflation forecasting, growth forecasting, central bank expectations quite challenging.
Well, that's what we want to go back to. That's the regime we want to go back to, because the problem with tariff news is it's very hard to model. It's very hard to price the certainty in the future that we always try and do as traders and investors is look at the future and price the certainty or risk around that. But it's obviously very difficult to do so, and that causes big dispersions in how that could play out. Is it good? Is it going to be bad? And people find it hard to model. So that's why we try and move on as quickly as we can, and we go back to doing what we do best, which is being data dependent. And what does that mean for the Fed rate cuts? Of course, at the moment, the market has pushed back the next cut to September. Could this week with the CPI number bring that back to more sort of mid-session, mid-year, sort of July sort of time frame? But that's what we want to be focused on. We want to be focused on how the data plays into earnings. Earnings have been very good in the US this year. I mean, in the earnings season, we've seen 62% of companies coming out. About 12% aggregate EPS increases so far, which is pretty good. 77% of companies have beaten. So we want to go back to the world of looking at earnings and earnings growth and what that means for valuations and equity risk premium. But that's the world we want to get into. So we need to move away from tariff. Unfortunately, there's still a lot of headline risk playing through in this market, and will be, as Trump is going to be all consuming this week.
We have seen some positive earnings out of Japan as well. What are we expecting in terms of the market impact, given all of these tariff news, but the fact that the Japanese yen continues to strengthen now for the past 4 weeks against the US dollar?
Yeah, I think it feels like the market's got seeing, in terms of the subordinated order of where we're seeing currencies is in terms of relative attractiveness, the yen's right at the top of the pack at the moment. We haven't seen any kind of major significant trends against the dollar, but certainly against some against the euro, against the pound, against some of the Antipodean currencies, it's looking a little bit more favourable at the moment. So we still continue to like being long the yen in that situation. Obviously, we're in a world of very simplistic, relative, policy differentials. And I think in a world where, sort of the deputy, the Bank of Japan is sort of modelling a terminal rate on the Bank of Japan policy of 1%, that feels too low. It doesn't necessarily think there's a significant trade in that, but 1% terminal rates feels a bit low in Japan, but they're still on the rise. They're still in a position where if they're going to hike faster than when the market pace is. So we still like the yen. Obviously, wages are looking good in Japan. The economy is in a relatively good spot. And as I say, the risk is if they are going to hike, they're going to hike faster than what market prices. So we like that story. So the yen still feels like there's upside risks, certainly against some of the risk currencies, and maybe against the US dollar, but certainly against the dollar, there's no real trend at the moment, which is what I want to see. So we like the yen. In terms of Nikkei at the moment, just from a pure price action perspective, it's just moving sideways at the moment. So it's one for the sort of mean reversion range traders out there. But it's pretty uneventful, and the market's just sort of wobbling between ranges at the moment. I think that's probably going to continue short term.
When we're looking at different sectors across Asia, are there any that we're thinking will inevitably benefit from all of the headlines that we're going to see out of the Trump administration, and some that will inevitably be hit, like the auto sector, for example, seems to be exposed to everything from metals to Mexico and Canada?
Yeah, exactly. I mean, I think the auto sector seems pretty interesting. I mean, sort of taking a swerve away from your question, I apologise. But I think the European auto sector is going to be one we're going to be watching very closely, because everyone's focused on the idea that we're going to see tariffs in Europe being taken down from about 10%, perhaps down to 2.5%. That could increase the demand from US importers for European cars, and that could be good when there's so much bad news being priced there. So we'll see what happens. But I think in the moment, if you look across stocks, not just in the US but in Asia as well, is that we are seeing probably about a wider dispersion as we've seen. If you look at realized correlation across equities, it's getting right into the bottom end of the 0 percentile. So we are seeing this very much a stock pickers market, and of course that low correlation across the stocks is causing volatility to subside as well. I think probably at the moment until we do see this situation cleared up and we can refocus away from tariffs, which markets have all been very well, is that we stay defensive, we stay in quality. The AI thematic, big tech across Asia is still looking precarious at the moment. There's still a lot of risks around that. It's kind of markets fallen out of love at the moment. So we still like sort of quality defensives. I think Australia is going to be an interesting one this week as well on the stock side, given that we've got reporting season about to ramp up. I still like CBA. I know everyone's got a position in it at the moment, but I think pullbacks will be very, very well supported. It's a quality franchise, and I think we're going to see that in the earnings this week. JB Hi-Fi and discretionary stocks, look pretty good. I think in Australia, we've got a bit of a nirvana situation with the backdrop there, so discretionary still works well, and I think that's a place to be.
Chris Weston, Head of Research at Pepperstone Group. Always good to have you with us as we continue to watch some of those big movers in today's trading session. Of course, one that we will be watching is Nippon Steel, given that we kept getting commentary from President Trump and also Prime Minister Ishiba that its merger with U.S. Steel might be over. We heard from Ishiba that U.S. Steel will remain an American company, and President Trump also indicating that Nippon Steel is considering investing in U.S. Steel instead of an outright purchase. Trump also saying that Nippon Steel can't have a majority stake in U.S. Steel. And of course, we have those tariff threats to contend with. Nippon Steel down at the moment, as we're looking at Korean steelmakers as well, losing ground with POSCO now at the lowest level since October of 2022. Tariffs on steel and aluminum expected at 25% to be announced on Monday, according to President Trump. This is Bloomberg.
Any steel coming into the United States is going to have a 25% tariff.
What about aluminum, sir?
Aluminum too.
10%?
No, 25%.
25 for aluminum as well?
25 for both.
President Trump speaking to reporters aboard Air Force One there about implementing tariffs on steel and aluminium. Well, the FT is also reporting that China's retaliatory actions against US tariffs are now in force, with a deadline passing at midnight Beijing time. Let's bring our Chief North Asia correspondent Stephen Engel in Hong Kong. What have we heard?
We haven't heard a lot, to be honest. We've been waiting, obviously, for that promised phone call between Donald Trump and Xi Jinping, but neither seems too eager to pick up the phone. At a time, of course, we've had about a week to digest the 10% tariffs across the board imposed by the Trump administration, and then that retaliatory move by Beijing within seconds of it being enacted. And again, neither of these two leaders have gotten on the phone, much like the markets kind of anticipated they would after Trump gave a reprieve to those tariffs he imposed on Mexico and Canada after phone calls to the respective leaders of Mexico and Canada. No such call between these two gentlemen. So we essentially saw Beijing unveil a rather measured approach to retaliation, because even Donald Trump said this was just the opening salvo with China. So Beijing is obviously maybe holding back to give some ammunition later down the road if needed. What they did do is they imposed tariffs on about 80 different products to the tune of about $14 billion. They also tightened export controls on some critical minerals tied to tungsten. They also launched an antitrust probe against Google. They essentially added just two companies, including PVH, which is the parent company of Calvin Klein and Tommy Hilfiger, to their unreliable entity list. And again, those tariffs were on areas that are not necessarily going to hurt China's domestic economy too badly. 10% tariffs on oil and agricultural machinery like tractors, and 15% tariff on coal and LNG, but not really on agricultural like soybean, like we saw in the first Trump trade war back in 2018, 2019. So it's wait and see whether these two gentlemen, now that the Lunar New Year holiday in China is over, whether they can have a phone call and discuss this and maybe iron out a reprieve. But essentially, as the Financial Times reported, 12:01 Beijing time, just after midnight today, that retaliatory action by Beijing took effect.
Yeah, not surprising that those actions were pretty measured and targeted, as you said, given, of course, the concerns about the Chinese economy, right? I mean, at least we saw consumer inflation picking up.
Yes and no. You have to really dig deep into the consumer price pickup in January. Yes, it was the Lunar New Year holiday. Yes, millions and millions of people travel. They go back to their hometowns. They spend. They give gifts. They buy jewelry. And the CPI inflation stopped a few months straight of disinflation. We haven't seen a pickup on month-over-month inflation since August, as you can see on the chart there. It was creeping down to zero there in December, popping up to 0.5% because of increased spending. But if you drill into those numbers, yes, travel was up. Yes, the box office hit records and travel numbers hit records, but essentially average daily spending per capita was not back to pre-pandemic levels. And that is obviously a concern, because we saw a similar thing last year when the Lunar New Year holiday hit in February. Consumer numbers went up, and then it petered out the rest of the year. And that is the big concern for the Beijing leadership. And that's why they're going to likely be attacking deflation 28 straight months at the factory gate. PPI deflation 28 consecutive months, down another 2.3% in January. That is going to be a big focus of the National People's Congress in March.
Our Chief North Asia correspondent Stephen Engel there. And here in Japan, we're following a big conversation that happened between Japanese Prime Minister Shigeru Ishiba. He managed to ease fears that Tokyo could be next in the firing line for Trump's tariffs. During his first meeting with the U.S. President, Ishiba secured confirmation for a close security alliance and a plan to deepen economic ties without attracting any threats to trade between the two countries. Let's bring in Bloomberg News senior editor Brian Fowler. Brian, so how did the Prime Minister do?
Yeah, I mean, I think before he went to Washington, a lot of people were saying it was a bit of a gamble, and we really didn't know it would happen. And the takeaway, as it's completed, is it was a big success for Ishiba. He went in and he mixed flattery with an emphasis on what Japanese companies are going to do for the U.S. in terms of investment. And really, he kind of got behind the Trump's U.S. first agenda. He was showing what Japan could do to help Trump with that agenda, and that put a very positive tone for their talks. And against that backdrop, the two leaders found a lot of mutual interest. They talked about, as you said, global security, and they also talked about energy, with Japan pledging to buy U.S. LNG and possibly to invest in the pipeline project in Alaska for gas and oil. Trump did ask Ishiba to help reduce the U.S. trade deficit with Japan, but it was a fairly tame request, and the bottom line is there was no aggressive, direct threat of tariffs against Japanese cars or pharmaceuticals. And so for Ishiba, that was a really big win.
And it seems that Japan is also backing off when it comes to Nippon Steel merger with U.S. Steel.
Yeah, so that was a big thing going ahead of it. Of course, we didn't expect Trump to voice support for an acquisition. He had opposed that, and we just didn't know exactly what the tack Japan would take. It seems that the two leaders came to an agreement that an investment would be the right way to go. Ishiba came back from Washington, and on Sunday he was on TV and he was talking about how that did seem like a good way to go. The companies, of course, are still pursuing a deal, and we saw Nippon Steel shares sell off more than 2% at the open today, possibly on disappointment over those talks, also possibly in reaction to the new tariffs on steel and import and aluminum from the U.S. But in the long run, I think if Nippon Steel does invest in U.S. Steel, that could be a win-win for both companies.
Bloomberg News senior editor Brian Fowler there. Well, Indian Prime Minister Narendra Modi's party, the BJP, has won the election in the country's capital after almost 3 decades. This win is a testament of his continuing popularity and indicates that the tax cuts in the federal budget last week got the approval of middle-class consumers. The victory comes ahead of Modi's visit to Washington this week. Bloomberg has learned that tariffs and new investments in nuclear energy are on that agenda. Bloomberg's Linda Armin joins us now for more. And let's first kind of dive into the implications and I guess the broader signalling that we get from that election result.
Well, that's right, Heidi. What a turnaround for Modi and the BJP party. Remember, Delhi is the capital of the country with 20 million people, and these voters have voted against Modi, rejected Modi and the BJP for almost 30 years. So it is quite a turnaround. In fact, the party did, really well, and that is testimony, perhaps, of the efforts Modi has made in trying to win back that support. A couple of things that people pointed to. One, the promise of freebies. Of course, he talked about giving cash handouts, talked about free electricity, and that's possibly helping to change the sentiment, given that, the Indians feel that they have been squeezed, especially when it comes to the middle class. Also, when it comes to corruption allegations among the opposition party, we know that in the last few years, in particular, several leaders of the opposition have been sent to jail on allegations of corruption to do with the excise policy scam. And of course, some have pointed out that this was part of Modi's strategy to tarnish the reputation of the opposition leaders. And of course, you talked about the budget, pretty much $12 billion put into the pockets of the middle class, and that some say was quite a stroke of genius. That's helped to turn around the sentiment among the voters. So quite a few initiatives from Modi and the BJP to turn around in terms of its power base, perhaps, the start of Modi winning back the support of his power base, basically the middle class in India.
Hasina, what are we expecting from the Prime Minister's visit to Washington this week?
Well, a much anticipated visit for Modi in D.C. Of course, a lot of pressure on his shoulders as he makes this trip. Remember, the U.S. is its second largest trading partner, and currently it has a trade surplus of $42 billion. And also remember, during Trump's first administration, India was slapped with tariffs. And given the tariffs imposed on the likes of China, Canada, and Mexico, there's a real threat that India itself will be faced with those tariffs. And we've seen concessions already made by Modi. He talked about how he's willing to buy more energy, U.S. energy. He's willing to buy more U.S. defense. And he's already made concessions when it comes to repatriating illegal Indian immigrants to the tune of 18,000, the first batch arriving in India, 200 of them arriving in India back home last week alone. So a lot is at stake when it comes to relations between the two in terms of trade, in terms of defense. And of course, we're also told that on Modi's agenda when he is in D.C. is that he's planning to meet with Elon Musk. Remember, Elon Musk was supposed to make his visit to India back in April. That was delayed because of issues to do with Tesla. This time round, that meeting apparently is scheduled, and Elon Musk seem to be wanting early regulatory approval to perhaps, have his affordable internet service in operation as soon as possible. So a lot at stake for both India as well as Elon Musk during that visit.
Bloomberg's Hassett Amin there. We have more ahead on the Asia trade. This is Bloomberg. Latest from the corporate front, DBS Group has reported fourth quarter profit that met expectations, helped by wealth fees and gains in lending. Southeast Asia's largest lender posted a 10% rise in net income, amounting to nearly $2 billion. DBS also plans a capital return dividend of 15 Singapore cents per share per quarter to be paid out over 2025. Bloomberg's been told that activist investor Elliott Management has built a significant stake in British oil major BP. Sources say Elliott wants to boost value by pushing the energy giant to consider transformative measures. Its shares have lagged peers, including Shell and ExxonMobil, over the past 5 years after failed bet that oil consumption had peaked.
Shery, take a look at how futures open up in Europe. We're expecting that consistent pressure when it comes to the euro, right, on these renewed tariff threats. And we know that President Trump has been hinting that specific tariffs on Europe are imminent. We are seeing stocks and currencies really taking a slide in the Asian part of the session. Futures, though, when it comes to the Euro Stoxx 50, holding up about 0.2% there. We are also seeing DAX futures a little bit positive, but certainly European earnings looking to be at risk if we do see these further tariff threats.
Take a look at how commodity currencies are trading right now. We're seeing the Aussie and Kiwi losing ground against the U.S. dollar. This, of course, on President Trump saying that he'll be announcing 25% tariffs on steel and aluminum on Monday, although no details on when they will actually take effect. We had seen significant hits on the CAD as well because of those tariffs that were announced against Canada and then delayed. The offshore yuan right now losing ground against the U.S. dollar after already the biggest weekly drop since November. The FT now reporting that China's retaliatory actions against U.S. tariffs are now in force with a deadline passing at midnight Beijing time. Bloomberg Economics saying that Trump's tariffs on China so far are more bark than bite, but they do expect the level to rise further. Let's discuss this with Emily Kilcrease, Senior Fellow and Director for the Energy Economics and Security Program at the Center for New American Security. Emily, great to have you with us. First of all, just give us your reaction to all of these tariff threats, because now we have them in place for China. We have the retaliatory tariffs. We have now threats on aluminum and steel. And of course, the delayed tariffs on Mexico and Canada. What should we be making out of President Trump's tactics here?
Well, it's a bit of a whirlwind, as you just outlined, and I do not think we are at the end of it. Clearly, President Trump is moving forward with a tariffs-first approach to foreign policy, addressing his long-standing issues in the trade space, like trade deficits and trade irritants with key partners, but also in kind of a new twist, linking trade issues like tariffs to security issues. That's what we saw clearly in Canada and Mexico, even going back to the spat with Colombia. So using these sorts of tariffs in new ways for different types of issues. And if you ask the Canadians, they would say in very coercive and unpleasant ways. I think we're just going to continue to see more of this as President Trump seems to be getting some initial successes in getting other countries to do what he wants through the use of these aggressive tariffs.
We saw the delays for Mexico and Canada. Are we expecting those to have been delayed because those are partner countries? Because for China, there doesn't seem to have been any room for negotiations.
That's right. So Canada and Mexico, there was this month-long pause because in large part, both the Canadian and Mexican leaders did something very demonstrable to address the Trump concerns around fentanyl and migration, right? You saw Claudia Sheinbaum rush 10,000 troops to the border. You saw Justin Trudeau promise over $1 billion in additional resources to the northern border. You did not see that from China. And I think that's a big reason why those tariffs stuck and did not get paused the way that the Canadian and Mexican ones did. And I think China's responding in a much more kind of resistant, moderated way because they clearly see that Trump is not done imposing tariffs on China. There was a 10% tariff that's now in effect, but that's minimal compared to the promises that Trump made on the campaign trail of tariffs was up to 60%. So I think in a lot of ways, Canada and Mexico had to respond. They did respond. They got themselves a little breathing room. China is very much keeping its powder dry at this point.
It's interesting because whilst demonstrable, those responses were seen by some onlookers as being quite muted, right? Perhaps more symbolic than, super concrete measures that perhaps some had expected President Trump to want to negotiate for. Did it, in a sense, give him an off-ramp? Were you surprised how easily that compromise was reached?
It did give an off-ramp, and again, it's not over. But if you look at this through the lens of the president playing to his own domestic audience, I think it's a win, right? I mean, he got two world leaders to drop everything and make these commitments. Now, were they kind of rewarmed, repackaged commitments that the leaders had already done some of previously? Yes. But again, he still has this looming threat of we're going to look at this again in a month. Plus, we have the broader issue of USMCA renegotiation coming up. So I think these leaders are very much looking at the pause and what they had to do to get this initial 30-day breather as perhaps only the first thing that they're going to have to do, only the first of potentially more concessions.
Perhaps the issue with China is that Beijing has never really acknowledged, the allegations or accusations of the role that President Trump says China and, China manufacturers play in the drug problem, right? If that sort of consensus isn't reached, are we likely to see negotiations sort of on foot that could come to something constructive?
Well, there was ongoing negotiation between the United States and China during the Biden administration, right? So the Biden team used sanctions, more traditional financial sanctions, to try to target specific Chinese actors believed to be involved in the trade of fentanyl precursors. But there was also bilateral cooperation on these issues. Now, whether it's possible to get back to that sort of kind of mutual law enforcement cooperation under a Trump administration, under this now 10% additional tariffs, I think that's going to be a much harder road because from China's position, they feel like they've been boxed in. They feel like they've lost face now. They're probably not entirely inclined to do something that would be helpful for the United States' own interests at this point. Particularly, again, Xi Jinping has to play to his own domestic political audience just the way President Trump does.
And yet all of these partners, say Canada and Mexico, have come through, right? They caved in pretty fast. Is the assumption right now that President Trump didn't hit China on the first day of his presidency with 60% tariffs, the understanding that he can perhaps bully smaller players, but Beijing is big enough to actually stand up to them?
That definitely has something to do with it. When you look at the trade that Canada and Mexico have with the United States, it's in the neighborhood of 75 to 80% of their exports go to the United States. They have to make a deal with the United States. They really don't have a choice. It's, when you look at the figures, they were going to tip into recession if those tariffs went into place or if they go into place in the future. China is different. It has a bigger economy. It exports to a more diversified base. The U.S. export market is incredibly important for China, but they've been planning for this sort of scenario for quite some time. This is not the first time that they've been living under U.S. tariffs. Their tariff rate going into this was 12%. So they know what it's like to live under U.S. tariffs. They've been preparing. And again, keeping the powder dry for what they anticipate are going to be more heavy tariffs moving forward in the Trump administration.
The way that the markets are reacting right now is that after all of this, the potential next target for President Trump could be the European Union. Right now, the narrative seems to be Japan, at least, has not been really threatened directly when it comes to tariffs, so they're kind of safe. Who do you think will be next?
Well, first of all, I don't think anybody is safe. Nobody should be breathing a sigh of relief here. I mean, I do think that the Japanese Prime Minister's visit to Washington last week does perhaps give them a bit of breathing room. That seems to have gone very well. But again, I don't think it completely removes the possibility of tariffs, particularly because we are continuing to hear about this idea of a universal tariff, something like a 10 to 20% tariff that would be applied across the board, all sectors, all countries. And so even if it's not specifically targeting a country like Japan, that will certainly hurt Japan's economic interests. And so really, there may be a couple of countries that are signaled out for special treatment, and that group might get bigger. But then there's also this idea of the universal tariff, using tariff revenue for tax revenue in the United States. Those sort of broad-based proposals are going to hit everybody hard.
Emily, really great to have you with us. Emily Kilcrease is a senior fellow at the Center for a New American Security. Well, President Trump's tariff salvos and frequent flip-flops are posing a challenge to Asian fund managers wanting to avoid any potential wipeouts in a headline-driven market. Our China correspondent Min Lo joins us now. So are there safe havens to be found at this point?
Yeah, I mean, it's a climate that makes it very difficult for investors who are looking for assets based on fundamentals. So a few things that Asian fund managers are looking at now are markets or assets that are relatively safe from the trade tensions. So one thing to look at is countries with very large domestic market like India, Indonesia, India in particular, because the government is focusing or prioritizing a lot on infrastructure development that would provide a bit of buffer against any trade friction, plus the fact that the U.S. doesn't have a huge trade deficit against India, so that means they are likely to be less under the firing line as well. And if you look at the Indian government bond market, they're providing returns of about 6.8% last year, very attractive returns there if you compare it to the around 2% that you get from the EM market. And another theme that has been playing out really well is the deep-seek related stocks. In China, you saw the Hang Seng Tech Index entering a bull rally by the end of last week. We see this catch-up trade on mainland China markets as well, and some of the big software makers, Kingsoft, up about 30% since the start of the year. So investors still pretty bullish on this AI play here, something to watch going forward. And another area to look at is also the high-yielding stocks, especially in countries like Singapore, Australia. The Singapore benchmark index yielding around about 4.9%, Australia's 3.2%, again, beating the sort of numbers you get from the broader EM or MSCI gauge that's based on the dividends, estimated dividends from companies this year. So these are some of the areas that fund managers are looking at, especially given that it's a year of volatility that markets have to brace for.
Yeah, and yet for today's trading session, we can, I guess, expect more volatility from the Chinese markets given these threats of aluminum and steel tariffs, not to mention, of course, the offshore yuan now being past that 730 level per dollar.
Yeah, I think it'll be interesting to see how markets open later, because steel, China is the largest producer of that, and those tariffs are going to be a blow to China, even if the U.S. isn't their biggest market. But we have seen, though, if you look at the screen there, the last close for these Chinese indices, they were doing pretty well last week. Again, perhaps because of the catch-up trade, the deep-seek phenomenon that we were seeing, but also maybe, as you said earlier, the opening salvo from Trump, that 10% tariffs, perhaps not as aggressive as people had expected. The fact that China had retaliated, but in a less than proportional manner as well, suggesting that maybe that China is still willing to negotiate. So people still cautiously optimistic there. But again, while we did see overnight the Golden Dragon, the K-Web, those doing pretty well as well, still very strong momentum there. But with the latest news we got about the tariffs on steel and aluminium, although not directly targeted at China, but still likely to shake up markets a little bit later.
Bloomberg's China correspondent Min Lo there. Let's dive a little bit deeper into President Trump's tariff strategy, because the White House National Economic Council Director Kevin Hassett now saying that President Trump has a multifaceted trade policy that goes beyond just tariffs. He joins Bloomberg to discuss the key factors in Trump's trade strategy.
You know, the bottom line is the first time I ever met the president, right at the beginning of 2017, that one of our first discussions about trade policy was about reciprocity. And so 100% that's going to be a key factor in President Trump's thinking and his team's workouts from his thinking as we work forward. And when you think about, well, what is reciprocity? How should we think about it? Then a lot of people focus on tariffs, tariffs, tariffs. And if we look at just tariffs, then you'll see that our trading partners tend to have tariffs that are 2 or 3 times higher than our tariffs. And so, like, if we were going to be reciprocal, then they could come down or we could go up, but it would be a lot different trade policy. But the way I like to think about it is just think about the fact that we have a tax system in the U.S. that's fundamentally different than the tax systems everywhere else in the world. And so I had my guys a couple days ago just update the numbers I always look at, and we found that U.S. multinationals had paid foreign governments $370 billion in taxes because of value-added taxes and income taxes in 2023. And foreign multinationals operating in the U.S. paid the U.S. government only $57 billion in taxes. And so they have 3 times the GDP we do, you know, globally. We're about a quarter of GDP. And we're paying $370 billion, and they're paying $57 billion. And that's not reciprocal. That's something fundamentally different. And what President Trump wants us to do is to come up with a really smart program that includes trade policy, tariffs, and revisions to the tax code. And he wants us to make it work so that America's on a level playing field again. And the reason he wants to do that is not because of the numbers, it's because of the people. The people in America who don't have jobs because we're paying $370 billion a year in taxes to foreign governments in order to incent our companies to not create jobs here, but create jobs overseas.
Kevin, you didn't mention Europe, but it sounds like you're talking about Europe. What's the ask of the Europeans?
The president is going to negotiate with the Europeans. He's going to negotiate with everybody. And at the time when he does that, you'll find out what his asks are specifically.
National Economic Council Director Kevin Hassett there speaking with our colleague Jonathan Ferro. Let's take a look at what we're seeing when it comes to some of the Australian mining stocks that are trading this morning. Of course, we saw that initial reaction to the downside to President Trump's 25% tariffs when it comes to some of these asset classes. But still, at the moment, we're actually seeing Fortescue completely reversing those losses. It was down about 0.8% early in the first hour of trading. It's now trading in positive territory. Rio Tinto and BHP Group also off those session lows there as well. We are expecting sort of broad downside when it comes to these steel and aluminium shares, but at the moment, Shery, we're seeing pretty muted market reaction.
Yeah, pretty muted for the Nippon Steel here in Japan as well, because we had heard, of course, that merger with U.S. Steel might be over. Prime Minister Ishiba saying that U.S. Steel will remain an American company. President Trump also indicating that Nippon Steel is considering investing in U.S. Steel instead of an outright purchase. So perhaps a lot of that had already been priced in. That became a political sore point between the two sides during the presidential campaigns in the United States. POSCO Holdings and Hyundai Steel in South Korea under pressure, falling almost 3%, as you can see there. Perhaps a little bit of a reaction to those tariffs to take effect, although we do not know exactly when they would come into place. We heard from President Trump that they would be announced on Monday. This is Bloomberg.
Take a look at what we're watching when it comes to broader commodities, given this renewed tariff threat of 25% when it comes to steel and aluminium. We are seeing pretty much a picture of positivity when it comes to iron ore at the moment. We're seeing primary aluminium for the last trade up about 0.3%. Crude is also seeing kind of some steadying gains after a third weekly decline. The market continuing to weigh these ongoing tariffs that are being announced by President Trump and how that's going to play out when it comes to demand as well, with those Chinese tariffs and countermeasures coming into play as well. Well, Bloomberg's Asia Energy and Commodities editor Andrew James joins us now from Singapore. And Andrew, it's been a pretty measured kind of market reaction so far.
Yeah, that's right, Heidi. It was a surprise when Trump started talking about steel and aluminium. One reason you're perhaps not seeing a huge reaction in Asia is that US sort of impact on iron ore markets is pretty small compared to China. Also, the trade in metals is kind of confined, well, it's mainly confined to the Americas, in that For steel, the US, which I think it's about 17% of its steel it imports, and the big suppliers are Mexico, Canada and Brazil. Aluminium, it imports quite a lot of its aluminium. I think it's around 80%, and Canada dominates that, with about half of that coming from Canada. One irony with these moves is that US oil drillers apparently are very reliant on imports, as they use speciality types of steel that aren't made in the US. So, I mean, if it could still be drill, baby, drill, but it's going to be with far more expensive drill bits. Yeah.
So, how much or how big is also the demand side of this calculation when it comes to metals prices? Because, of course, we have China being one of the biggest importers of the metal, also a large producer, but at the same time, they're facing their own tariffs against the U.S.
Hi, Shery. Yeah, so in terms of iron ore, China is very dominant in that market. We're seeing a small move upward in iron ore today, but it's not massive. I suspect it may have more impact on the aluminium prices. London Metal Exchange prices will open pretty soon. But yeah, the US is a smaller consumer of metals than you might expect, with China very dominant. Within the US, though, I've mentioned the oil industry. It's going to affect that. It's going to affect the renewables industry. They're big consumers of steel, also obviously construction. And aluminium has a lot of different uses, you know, from tin cans to car exteriors. So yeah, it could have some pretty big impacts on American domestic industry, although we still don't know when exactly it will come in. There's a lot that's up in the air. It's still a little bit unclear if this will apply to Canada and Mexico after Trump delayed the tariffs by a month, and aluminium and steel would have been caught up in that. So yeah, he appears to be sort of making up policy pretty quickly, and there's quite a bit we're still not completely sure of.
Bloomberg's Asia Energy and Commodities editor Andrew Janes there. And here are some of the top geopolitical stories that we're following as well. Israel has pulled troops out of a belt of land in the Gaza Strip after recovering 3 more hostages. With the initial truce period half complete, mid-level Israeli envoys have set off for a new round of talks in Qatar. Any full Israeli pullout from Gaza will have to be negotiated in the second phase of the deal, along with a Hamas handover of remaining hostages. Meanwhile, Saudi Arabia has once again dismissed a proposal to resettle Palestinians from Gaza in Saudi Arabia. In a statement, the kingdom says the Palestinian people have a right to their own land and are not intruders or immigrants who can be expelled. Israeli Prime Minister Benjamin Netanyahu last week suggested a potential Palestinian state on Saudi soil after President Trump said he wanted the U.S. to take over Gaza. President Trump has frozen all U.S. aid to South Africa, citing false claims of rights violations against the Afrikaans population and South Africa's genocide case against Israel at the ICJ. South Africa says it's seeking diplomatic solutions to any misunderstandings, and a group that says it represents 2 million Afrikaans speakers has voiced opposition to Trump's decision to withdraw aid while rejecting an offer to settle in America. We have more ahead on the Asia trade. This is Bloomberg. Japanese car makers headlining this week's earnings, Nissan and Honda, due to report, but those results could be overshadowed by the potential collapse of closer integration talks. Honda's third quarter operating profit probably expanded thanks to robust U.S. vehicle sales. Nissan, on the other hand, could see operating profit weighed down by stiff competition and inflation. SoftBank is also releasing results. Investors will keep an eye on its AI commentary following a report it may invest as much as $25 billion in OpenAI. And those are some of the themes that we'll be following in the Asia markets, especially here in Japan, around artificial intelligence, around Steel companies, of course, we have those potential 25% tariffs on steel and aluminum. Not to mention the automakers could take a hit on all sides, given, of course, the tariffs, but also their vulnerability to exposure to Mexico and China. So, Heidi, really a lot of downside risks for the markets right now.
A lot of downside risks indeed, Shery. And let's take a look at what we're looking at when it comes to trading in US futures at the moment. A little bit of upside for S&P futures there. When it comes to the open in Greater China, is looking a little bit more meek, if you will. FTSE A50 China futures off by about 0.3%, and we're seeing some decline spotted ahead of the open in Taiwan there as well. That holiday lift for China CPI seemingly not really injecting too much optimism when it comes to the longer-term deflationary risk that is still there, and that weak consumption picture is still one to watch. We'll be watching for further impact of the 25% steel and aluminium tariffs. This is Bloomberg.